So now let's go through the home buying 101. It's the basics. These are just the basics, how to get started with your journey to becoming a home owner. So here are the factors of a pre-approval. All right. A lender is going to look at your credit history. You're going to look at your employment status. Are you employed? Are you self-employed? Are you a W-2 employee, a contract employee? We're going to look at your qualifying income. Is it W-2? Is it 1099? We're going to look at your existing debts, and we're going to look to see what you have for your down payment. Now, if you look here, we're going to talk about the importance of your credit history. The top line there, the green line, this shows you that about 20% of what the creditors are looking at has to do with new credit or the types of credit you have. And then about 15% is the length of the credit history. All right. And then 30% is amounts owed. And then 35% is your payment history. So if you look at the amounts owed and your payment history, it makes up a large portion of your credit history. This is why it's important to pay on time, okay, and not get yourself too far extended. We'll talk a little bit more about that. Your credit score, the credit bureaus really like that debt ratio to be around 30%. So if you've got it around 30%, that's going to give you the best score. If you're up around 80, 90%, you need to find a way to get that down closer to 30% to improve your debt ratio, which will also improve your credit score. So, and this will tell you a little bit about the importance of your credit history. So what we're talking about, on-time payments, a history of monthly payments on time shows that you're more likely to make your mortgage payments on time, right? So that's what they're looking at. If you've got a lot of late pays in there, and we see this often, late payments are one of the quickest ways to lower your credit score. And guess what? There's nothing you can do about late payments. They are on there, and from my understanding, they're on there for 7 years. So make your payments on time. If something's happening, you can't, try to reach out to them and get some sort of arrangement. So they show 30 days late, 60 days late, 90 days late, and those stack up and really reduce your credit score. It can be a factor in the type of mortgage you qualify for. So we haven't talked about the different loan types yet. We'll talk about conventional and FHA. And sometimes if your score is lower, you're not going to be able to qualify for one of the premium loans that you want to get. Maybe the conventional loan is best for you and you're not going to qualify with that score. Or if you do qualify with the lower score, you're going to pay a lot more for the rate you want, and you're going to pay more in what's known as your mortgage insurance, which if you put less than 20% down on the home, you'll pay mortgage insurance, which if your credit score is lower, your insurance is going higher. So I can't stress enough to keep that credit score in check. It can also determine the amount that you can be approved for, how much you can borrow. And again, as I mentioned, that interest rate is greatly affected by your credit score.